Hello, everyone, and welcome to this episode of our Seven Investing podcast. I'm Seven Investing founder and CEO Simon Erickson. I am joined by my colleague, Seven Investing lead advisor Anirban Mahanti. Anirban, good afternoon to you down in Sydney, Australia.
Good evening to you.
And it is good evening for me in Texas. We are also joined by another time zone represented in the globe. We've been chatting a lot about international investing lately, and we thought that this would be just such a great opportunity and exciting chance to catch up with a good friend of ours, Chen, down in Singapore. Chen is the head of investing for the Smart Investor service out there that's looking at growth stocks, dividend stocks, a whole bunch of different types of investing. Chen, thanks very much for joining us on the Seven Investing podcast here.
Hi, everyone. Glad to be here.
Chen, we really want to kind of chat about how it's different in Singapore and in Southeast Asia and China, just how the companies are a little different down there, maybe how the investing is different in different parts of the world from where we are. Can I start you with the first question of what is it like for consumers in Southeast Asia? How are they different than they are here in the United States or in Australia?
Well, I think the first thing you can say is there's no such thing as an Asian consumer. Even I think within Asia, if you look at Japan or Korea, or in Thailand, Malaysia, Philippines, Indonesia, Singapore, India, China, these are all very different sets of consumers. So I spent 20 years of my life in Malaysia and the next half of my life in Singapore, right? And I can say that even between two countries where you can literally walk across, right? I used to walk across to Malaysia. It takes about 15 minutes. You can't do that now. But even then, these two countries are very different in terms of demographics, religion, spending power, political systems, and so on. So I would say that Sea Limited probably is a very good example where they were able to sort of push back, and even though they started late within Southeast Asia with Shopee, the e-commerce site, they were able to actually dominate within Southeast Asia because Lazada, which is backed by Alibaba, is more, I would say they're more used to or experienced in managing large populations and large deliveries. But when you come to Southeast Asia, there's a difference between China and Southeast Asia where there's so many different cultures, languages, demographics, and I think that's why Sea is winning over Lazada.
Yeah, that's perfect. And I mean, oh, go ahead, Anirban. Yeah.
No. Go ahead. You go ahead, please.
I just wanted to follow up with that and ask about, regional monopolies. You said there's so many different cultures, different countries, different languages. E-commerce is kind of, we see it as winner take all. I mean, in the United States, we've definitely seen Amazon rise to dominance here. Do you see regional monopolies in e-commerce in Southeast Asia emerging too on a country by country basis?
I would say it's more country by country basis. I don't think that any sort of e-commerce platform can claim that they are the dominant e-commerce player within Southeast Asia. It's probably better defined as the dominant e-commerce player in Indonesia, Thailand, Philippines, and what's the last one? Vietnam, which are the three or four major countries with the most population within the Southeast Asia region. Most of them tend to be headquartered in Singapore, but those are the four countries with the most population. I think the dominance tends to be focused by country rather than by region. And I think that's one of the reasons why Sea Limited actually were dominant. It's part of their DNA to actually localize based on that country.
Excellent. I was going to, follow through on sort of just the consumer trend, and you already mentioned that consumers are different. What I'm interested in understanding is sort of, we are doing this via Zoom, and a lot of these things are happening via Zoom. The world is changing to some extent. While it's coming back, it's also changing at the same time in the sort of the COVID world and post-COVID world. I'm just interested in understanding what you see on the ground in Singapore in terms of what the post-COVID world looks like. And I guess, how does that differ from, say, what your experience is based on, say, Malaysia or other parts of Asia, China and so on, and how are the consumers going to, I guess, react and participate in the broader economy?
Yep. So I think in Singapore, they've got the COVID situation. They perform quite well in controlling the COVID situation. I hesitate to say that this is always going to be the case because just of the nature of the virus, where you just need one case and a cluster develop, and it can become a problem. And indeed, that is what is happening in Singapore. There was a period of time where there were very low community cases. And recently, there's been a flare of a few clusters developing, which has brought back some of the measures which were previously implemented in limiting the amount of people gathering and so on. But I would say that the post-COVID world, I don't want to say post-COVID, because I think it's more like age of COVID. COVID is not over. COVID is here to stay. I think that there's a lot of similarity with what is happening all over the world. The amount of online shopping, for example, just to provide an example, has gone from 5% to 25% at the height of the sort of lockdown measures, and then back down to 10%, which is still lower compared to the height, but it's still like twice where it was in January of last year. So I think that online shopping is definitely picking up. People have been going online and shopping online and using online services more. And I think to a sense that people are becoming more used to living with all these restrictions and so on, and being comfortable with something like this, a Zoom call.
So just as a follow-up to this, I guess, would you say that there's room for hybrid, where I think the work culture changes a lot, 60% at home, maybe 40% in the office, of less crowding in the offices, therefore enabling more technology, widespread adoption of different types of technology, whether it's in the cloud or augmented realities or virtual reality, whenever they become feasible, and just create a different type of, we're moving towards a different world, I guess.
I think the situation in Singapore is quite different, because the vast majority of people, when you look at supermarkets, for example, I think the retail floor space per capita for retail space in the US is more than 20, right? Then Singapore is closer to 6. And a lot of the supermarkets in Singapore are actually located at key transportation nodes. So it's actually part of everyone's daily commute, right? So it's a very good, if you go to work, for example, or go to school, or just simply go out, you will definitely pass by a supermarket. And it's very convenient to just drop by to pick up something, have your meal, have your haircut, or do whatever. So I think there's a difference there. Even in Malaysia, where there is, unless you're in KL, there's no mass transit system. If you like a supermarket, you drive there. If you don't like it, you drive somewhere else. But in Singapore, it's part of your daily commute, right? So you would simply use it out of convenience. So I think that retail-wise, definitely people are adapting, and there's definitely space for hybrid sort of structure between offline and online. The other example I can share is recently the CEO of DBS, who is the largest bank in Singapore and I think Southeast Asia, he actually said that they are looking to have 40% of their workforce work from home, or spend 40% of their time working from home, but they're only reducing their office space by 20% instead of 40%. And they believe that the office space is still important. It's just that it needs to be changed to foster a more collaborative environment.
Chen, shifting gears a little bit, I want to talk a little bit about tech companies out there in Southeast Asia, and also in China. In the US, our tech companies keep getting bigger, and data privacy keeps coming up over and over and again. Facebook and Google and Amazon, we keep talking about privacy and kind of this back and forth with the government of how regulations should fit in with this. How would you define tech companies and their relationship with the government, either in China or anywhere in Southeast Asia?
Ooh. So I think in China, we have seen the stories and so on, where the Chinese government tends to be very interventionist. They do come down pretty hard. I suppose I can share 3 stories. Number one, it's from Serging, who is my friend and ex-colleague at the Motley Fool Singapore. He said that Chinese companies serve 2 masters. One is the shareholder and the other one is the government. So that's one point of view which you can look at. The second one, which is maybe a bit more colorful, one of my friends, he said that for every stock the Chinese government has actually messed with every single Chinese company he has owned. Now, he didn't use the word mess, he used a more colorful word for it. But since this is a family-friendly podcast, I will not be dropping any bombs. So, but I may have given away the plot. But it's a funny way to describe it, but I can't say that he's wrong, right? On the other hand, you have a lady by the name of Jenny Lee, I believe, and she's from GGB Capital, and she gave this very interesting point of view. She said that Chinese companies, and GGB Capital, by the way, has been investing in Asia for a long time, and she said that Chinese companies actually benefit from partnering with the government. The government, for example, has built structures for 5G, for example. I believe there's now 300 million 5G subscribers in China, or more than 300 million. And I think these sorts of connection, faster internet, are better for companies like Tencent, Alibaba, and so on. But on the other hand, when it comes to regulation, the Chinese government, in her view, tends to take a wait and see approach, right? They let all this innovation, or what Andreessen Horowitz calls permissionless innovation, where you don't have to ask permission to actually innovate. And this happens for a while, and as things develop, then they come in and actually put in regulations. Now, of course, the timing and how they actually implement all these measures tends to be a bit sometimes viewed as heavy-handed. The timing can sometimes look suspect, but generally, I think there's some. I think there's some credence to a point of view.
Excellent. Related to just staying with tech companies, one of the things that so if you take a tech company like you're familiar with, say, Amazon, right? Amazon has not paid a single cent in dividends. And just before the show, you were talking about how dividends are so important in Australia and Singapore, right? People actually look for dividends. Do you see the mindset in the tech companies that are coming up, say, in Singapore and in other regions of Asia, where they have this sort of mindset that the American companies have typically demonstrated, where we're going to take every cent that we are making from the business and putting it back into the business to try to grow the business, and the free cash flow and the profits are going to come decades later, and that's okay, and the market has been okay with it, right? So is that changing, or do you think the American companies are going to become more like the Asian companies in that sense, in terms of how they have been investing profits or cash flows? Let's talk it.
I think for the traditional companies, not the tech companies. So when I say traditional businesses, the banks, the telcos, and so on, share buybacks are quite rare. I think there is some share issuance, but it's all very tepid, quite tame in comparison to tech companies. I can't speak for Asian tech companies, because I think that you have examples such as Grab, which is, I assume, still not profitable, and then you have examples such as Alibaba and Tencent, which have plenty of free cash flow. So I think it really depends on the company and what they want to achieve. I guess that it's in the US, or not in the US. I think in the early days, the likes of Shopify, the likes of Atlassian, for example, in Australia, they actually benefited from this shift of offline to online, where in the early days you could get advertising for really cheap and low prices at Google and Facebook. But I think in the current environment, where where a Google and a Facebook has already matured, you may have to spend more if you want to reach more people.
Yeah, that makes a lot of sense. Speaking of Tencent and Alibaba, huge companies in China, huge ecosystems, huge for digital payments. And I know a lot of people in China are purchasing digitally. You've got, what is it? Is it WeChat Pay and Alipay? Is that true in the rest of Southeast Asia too? Are mobile payments in these digital ecosystems that are giant, are those picking up out there also?
I would say it's definitely picking up, but it's nowhere near the sort of widespread usage within China and so on. I think that I'm told that, and I haven't been to China for quite some time, but I'm told that in China, it's quite rare that you use cash now, right? So, but in Singapore, I think cash is still very common. In Japan, it's still very common. But it's changing, right? There are more options coming up. All the similar trends which you see, buy now, pay later, with Afterpay in Australia. There's virtual banking licenses being awarded in Singapore, 4 of them, and I think Malaysia is looking to do the same. So I think it's catching up. It's just not quite there yet.
How about Australia, Anirban? Is it similar down there? Afterpay, is that just a huge company down there in Australia?
Afterpay is a big deal here. Like, I mean, it's probably now one of the largest companies on the Australian market. But buy now, pay later, I mean, has taken off by a storm, right? So that's basically like Affirm to some extent. There's, there's Klarna, there's ZipPay. The model is very interesting. I find the model very interesting in that, it's basically just a management of cash flow to buy the jeans. It's basically, you take a mortgage to buy jeans or whatever else you want to buy, which is a very interesting concept. In many ways, you can think of it as a microcredits, right? You're getting little microcredit. And so it's hard here to understand what the end game is or how far this thing can travel, right? Afterpay is making inroads in the US and has made inroads in the UK, but so can PayPal or anybody else offer. PayPal is offering the same sort of ideas right now. It's offering buy now, pay later. So, but interesting space, I think, in terms of how this industry is shaping up.
Yeah, perfect. And Chen, just one more question for you. Myself and Anirban, we were all colleagues a few years ago. You've now gone on in Singapore to launch the Smart Investor. Can you tell us a little bit about your organization?
Sure. So I think the simple way to understand the Smart Investor is that we were, the Motley Fool decided to exit Singapore. And as they exited, we started to realize that there are a lot of members who were sort of left at sea. And they were asking us quite strongly where we're going, what we're doing, and so on. And it was a great surprise to us because usually when a service shuts down, there's a lot of anger, understandably, and so on. But what we got instead in Singapore was, I would call it almost an outpouring of love, right? And I think that we are really lucky that people saw us for who we are and not the banner which we are standing behind. And that's why we started the Smart Investor. We wanted to help Singaporeans invest. We saw that they appreciated what we do, and we thought that we could add value to their lives and their financial lives.
Perfect. Well, it's been really nice to reconnect with you again. Chen, thanks again for joining us here on the 7 Investing Podcast.
Sure.
Thank you
for
Chen.
having me. Yeah. Thanks, everyone.
And on behalf of my colleague, Anirban Mahanti, I'm Simon Erickson. Thanks for tuning to this episode of our 7 Investing Podcast. We are here to empower you to invest in your future. We are 7 Investing.